Hey everybody, welcome back. Well, we can all see that the ES lifted here, had a decent day, and we did spread out. I do want to just take a second after looking at the ES before we go any further to just kind of dive into this a little bit. Go take a look at RTY, and we can see the movement that we had here on the Fed minutes, and then I want to just look at NQ so that you can get a sense of this, and then we're going to jump right into it. I'm going to keep it short, sweet, and to the point. Subscribe, click all notifications. Make sure you click all notifications. And if you are on the list, make sure on the wait list to get in the community, please make sure you check your email because there's only 4 days left. Let's do it. At Fed minutes today, and we should go through a couple of this because not a lot of it, but a couple things with it. Fed minutes showed little support from interest rate cuts later this month. Why I thought this was so interesting is because we have a bunch of people that are vying for the new job. You can see this is July 9th, it just came out. Why it's important is there are people in there that want Powell's job, and he's up for this in May. We all know that he's not a fan favorite. I don't think there's any love lost on either side, quite frankly, between him and the current administration, and calling for that kind of return to cutting rates. Nevertheless, not a lot of chatter about cutting rates this month. But what we did see was a lot of talk about September and September rate cuts. As a matter of fact, when we look at the Fed tool, which we're going to do in a minute, it actually moved. It actually got stronger for chances of a rate cut in September. And I thought that was pretty interesting today. So everyone's leaning, you're not getting a shot in July, but you definitely have one coming up in September. One of the lines that really stood out was that there is a general sense among most Fed Reserve officials that interest rates could be lowered by the end of the year. So if we had to pick a direction, we would have to say that direction is, of course, down. And a couple things here. The debate around the June date, it's kind of interesting because it's not minutes now, it's from June and it comes out now. And it's about 3 weeks later. They focused on inflation risks and they expect to cut in September. I mean, this is where they're at. Only a couple really came out and said, hey, we should be cutting now. And I think that's a little different than the majority of us thought. It's certainly different than what I thought, but I do think, and again, no one really, these guys don't get along. But I do think it's interesting because if you had to look at it from the standpoint of like, okay, well, we have this arc. And if we look at the arc, which way is the arc going? The arc's definitely heading down, right? I do think there's something to that. And that's why you're seeing some of the home builders. And we'll get to some of these sectors in a second. But it is a change. And the change was reflected today. It was not a lot, but enough. And we did see it more in the equities than anything else. But what you're seeing is, here's the current rate, and there's a 29% chance, 29.9 that it stays there. But this morning it was 35.4. And if you look here, the chances of a cut after those statements went from 68 to 65.6. So their chancing of a cut has increased dramatically and now is at that 70% because they take everything here and they just total it. And that would give you the probability of a cut, all those numbers rated. And that's where they come up with this. It's something, it's definitely different than what we've had. And it's certainly different than where we've been, where they're saying, yeah, we most likely will see this cut coming sooner than later, and people are starting to agree on it. Despite the bets, they're actually agreeing on it. Now, I got asked in the comments to do smart money, dumb money, and as always, I like the comments, and I do read all of them, and I will do it if it makes sense. And it does make sense because of what's happening right now. There's a divergence going on. But real quick, we don't refer to this as smart. We don't refer to this as dumb. This is calculated by institutional order flow. This is calculated by retail order flow. We always like looking for these kind of areas where they converge because it usually gives us some semblance of what's going on. Institutions move like a tortoise. Retail moves like a cat on a hot tin roof. Very emotional. Institutions just pick a direction and stay with it. And you can see retail is all over the place. We're in, we're out, we're in, we're out. Institutions we're selling, we're buying. When they are done, it usually tends to mark a level, but it also depends on the spread between these two, as you guys are aware of if you watch this for some time. What does this mean to you? Well, you got a couple things going on here that are really standing out when we look at this on a 3-year chart. And we'll zoom in on this in a second. But if we take this snapshot right here, we have flipped back over to the overbought, and we can stay overbought. What we need to say is we need to continue to see retail continue to stay here and be stagnant. And if they're stagnant or drop lower, that's fine. If retail starts buying, or institutions start buying, that's fine as long as retail doesn't puke. Usually, retail puking is what makes institutions look at the market and think that it looks great. And that can lead to selling. And there's a lot of signs of that. Like, for example, if you take a look from this side on, right in here, when retail puked, right in these levels, that was pretty much it. And then institutions are just like, well, take your time. We'll take our time buying. And from that, you'll note that all you did was just drop. You just went down. And then this obviously is when they did what they were going to do and said, we're not going to, we're going to cut rates. And then he never did it for 9 months. If you see institutions sell and retail wants in, well, that's like a big deal right there. And that's super important for people to see and for people to get. So I really do believe that, and I really do think that that's very important. And I do think that it's something for us to take a look at. So what does that mean if we drill into this? If we take a look right here, we can just zoom in on this on the 1 year, and we can look at these little inflection spots and say, was there anything to this? I think there is. I think it's pretty obvious. So what do we have here? Okay, well, we flipped, right? And that means retail is buying and institutions are selling. So from this flip, we still have that trade going on. Institutions are still dumping and retail's still buying. As long as retail stays in this area and above this, we're good. If retail panics and institutions don't own stock and they're going to start buying, they're going to start buying very slowly. See, this can continue to go up with just retail staying overbought. The issue really comes if retail panics. When retail panics, like it does here, that's really what causes the problems. And that's exactly what will happen. You'll see retail panic like in here, where they're like, oh, I got to get out. And institutions will be like, oh, we're going to buy. We're just going to take our sweet time. And then they're maxed, at the low, where retail has just basically puked everything that they have. Hence getting its name smart money, dumb money. It's not always the case, but in this case, it definitely is. Versus here where, institutions are selling and retail's buying. That's not who's smart, who's dumb there. That's why it's really important to understand how this stuff's calculated. But, when you're overbought here and you start to slope down, yeah, it does tend to put a bottom in. You're at a spot here where you might start eventually to get some kind of cross trade where institutions come up and retail pukes, but you're just not there yet. And again, just a real quick year to date, see the marks, see where it's sold, see where the buying is continued, and you can see what we're dealing with right here. And it's continuing. We're actually curling up and institutions are still puking. So technically speaking, this looks really good. Let's get to some names now. Let's start with the big news after hours. We have a company, Ferrero, roughly $3 billion deal for maker of Fruit Loops Frosted Flakes. Let's get to it. Now, after hours, we saw this huge move up on the news. Right now, stock's at 27. Very interesting story because you have a company here of real low float. Supposedly, there's a very large short position in this, I guess, because of the people concerned about the sugary cereals. But there is a company in Italy with a tremendous amount of money saying, we don't care. We want Fruit Loops. We want Fruity Pebbles. And they're willing to pay up. $3 billion puts this thing between 33 to 35, depending upon how you do the deal. And if you're counting that as, their debt outstanding, et cetera, et cetera. So you have to come up with a rough number because you're speculating. You're off that deal from 27. So there's still ways to go here. There is a very large short position in this. I'm trying not to laugh because that's one thing. Like it's one thing when you get hammered in like a tech short, if you're short tech and you get hammered, but to short Fruity Pebbles and come in tomorrow morning and have a bad day, like you just really can't live that down. So I think it's super important for us to take a look at this and just be aware of this. Now, themes are here and they are fantastic. I was very vocal this week about NVIDIA and everyone basically was like, gosh, he's going to yammer on again about NVIDIA. But, you've been doing nothing but going up ever since what? Wednesday, Thursday, Monday, Tuesday, Wednesday, new highs, pushes, comes back down. You don't really get those real follow-throughs on this. You're getting those short, like tepid moves, but you are going higher. Take a look at this today. It was textbook. We actually bought it yesterday, held it overnight for a day trade. We have a bunch of swings on this from the community. Please look for your letter to get in the community. They are going out and the enrollment's only open for 5 days. And it was textbook sell, actually, and I'll just show it. You break out, see how this bar completely encompasses everything else that's associated with this? I don't need to make an 8-minute video about this. See how this bar just encompasses everything else that's going on in there? Yeah, that's pretty much Amityville Horror. Get out. If you ever took the low end of that bar and then you just say, well, how do you know that? And just take the low end of these bars when they encapsulate everything and close at the low and look at the rest of the day. You really don't need anything else. You don't need to wait for your special VWAP. You don't need anything. Like you don't need, that's it. It's game over. Usually it's game over. If you flip a coin over and over again, I'll take that trade every single time that way. And it was what it was. We had a great day trade on it. You saw a bunch of this stuff moving that way. Oracle, again, doing the same thing. The fall down, only to bounce, only to kind of come back and then just sit there. It's really been in this weird range. I find this incredibly hard to trade from a day trading perspective because these movements off the open are just staggering. 235 and in minutes, you're down really, really hard. I had a great short today. I'm really excited to show everybody. I'm really like the cat's pajamas. But you did it again today and you went sideways. But I wouldn't sleep on this because, again, here you are and you're at highs and you're forming this hammer over top. Another really good trade we had today was Microsoft pushing on the upgrade. But we're not getting that follow through. We're getting retail and then we're getting the dump on retail, and then we're getting institutions to kind of come in slowly at the end of the day. And that kind of ties with smart money, dumb money, doesn't it? And what I'm going to say is the same thing that I've been saying. Be really careful doing like these 1 minute, 5 minute, and VWAP orb trades right now, because you don't have institutional support. There's a time to do these trades and there's a time not to do them. And you can see by the time you're trying to figure out what to do with the VWAP side of this thing, it's not really where you want to be. Really, the trade was you got an upgrade, you buy it, and then you kind of go from there. Like, you never really had that opportunity unless you're going to be super quick and say, oh, no, I bought this wick, which you could have done, but the open was a better price. So I think that there's a lot of that going on right now, but we could do that in another video. Purpose I'm getting at here is you have buyers, you have net buyers out there in the market. And if we took a step back, this is what got me today. I was kind of shocked, I tell you, that these names were actually moving. Like Toll Brothers was moving on that. MHO is the one that I've been looking at. It's trading closer to book value, and for the past 10 years, it's outperformed Toll Brothers. But these names actually have a bid to them right now. Linear, all of them, KBH, they all are getting a bid. GRBK, Green Brick, that's like the high flyer. If you're ever looking for like the high test, I got to remind myself of this one. If you're ever looking for like the high test of the space, this is it. This is your high test. This is your octane. So the best in class is NVR. No one buys NVR because it's $7,700 a share, but it's best in class. It's interesting because they're buying these. So you look at now and these movements that you've had, and the reason that you're getting these movements, that I see that you're getting these movements, is real simple. You're getting these movements because they're starting to think that they're going to cut rates, and we're going that way, so they're getting ahead of that. But now, which is a 3X ETF, that looks like it's moving. DPST is something we've had a position in. I think we're up $13 or $12 in that sucker right now, continues to grind higher. And then you just have the good old-fashioned buy what? Small caps, because they should go higher. Should they? They should, but are the earnings there? I don't know. Maybe you're thinking they're going to turn. 15.9% is regional financials, so maybe they think it's going to turn. And you look at KRE and how's that doing? You're hanging in there. You look at the XLF. It really didn't participate. But that whole thing, and the 10-year auction went really well today. That was at 1 o'clock. And then we went right into that 2 o'clock. So they are buying bonds. I mean, you can always look at it and go US, and then start getting into like US, the 2-year, the 5-year. We're not going to do that for time's sake. It's just not worth it. But I do think that looking at this, you're in decent shape. People are worried about the dollar. I don't think that we have to be that worried about that. The follow through to me is most interesting. But there were a couple names here that I want to go through. I want to go through the themes that I've really been pitching here. Really is the tokenization theme. A lot of people still are not getting this. This absolutely ripped today coin, and you're forming a flag. You're right on that 350. I got a lot of comments yesterday about getting really specific on doing more technical stuff. So I'm going to start getting more technical. The overlap, like a lot of people say, if you show this, what's the community like? The community's a lot different, like a lot. It's way more specific and actionable. But something like this, we got in around 265, got out, and a bunch of us are in it again. But I like this a lot. I mean, you're setting up here. If you're not looking at this tokenization thing, you're missing it. You really are. This is something we've been looking at since about 122. A bunch of people got in. I tried to be cute. Ask me how that worked. But if you look at this level right in here, I know it's so funny. You come out, you put this whole theme together, and then they just give you that middle finger pattern. But you put this whole theme together, but they're going to be it in Hong Kong for a stable coin. And people are just starting to understand this. And I don't think it's going to go away. The volume that's coming in is pretty staggering and starting to pick up, and they're going to get it. And I think it actually starts trading more and more in Asia ahead of that event. And I think people need to look at that, the stablecoin side. They're looking at it from a different angle. They're looking at it from a tokenization of equities. And I'm not saying not to look at that, but the Futsus of the world, that kind of stuff are there definitely. Best trade was probably this BMR. And for time's sake, I'm not going to really walk through it tonight. But it's funny. I reserved the stock because you can reserve stock overnight, like for shorts, and you just have to pay the borrow. And I shorted it last night, and then I'm like, oh, I'll just give the rest of the borrow back and borrow it again in the morning, so I don't have to do the carry over borrow. Ask me how that worked. Not very well, because then when I went to go in short, they're like, oh, you no longer have your borrow. I'm like, fantastic. So I had to go put in the request to get the borrow again, got it, and but by that time I missed this, but it just presented another opportunity, so I did it. And you can see these right in here. These stocks, when they crack, man, they crack hard, and everyone's shocked that they did an offering. I don't know why you'd be shocked by it, but I was able to pull out like $18, $20 on that move. So This thing's probably toast now. I mean, they got their money out of it. You know, they got everybody in it. Everybody came in, thought it was the cat's pajamas. That's what everyone says, right? Or the ant's pants. You're pretty busted now. You'll come down and you'll pull like an SBET, which I did try today. I did try on that turn, and then all they did was sell the heck out of it today. I mean, if you really look today, that's all they did there was just sell the living heck out of it. So, you know, you might be busted there. That might be the end of it. The tokenization is super interesting. If you go and take a look at the tokenization for a second, drop this down and just go look at the sectors, sort by sector, and just look at the big ones. Look at the XBI, look at the home builders, and then you have the crypto space. It's interesting because they're positioning themselves, because XBI always does well when you start getting interest rate cuts. Why? Because they have to borrow money to create the drugs, and they can last longer. I mean, their burn rate is lower. Like, you would burn less cash, right? If you could borrow money cheaper. Just makes sense, doesn't it? You know, if your interest rate's 8% versus 18, just hyperbole to get it, your burn rate is going to be less. And you're seeing some flyers, a bunch of people in the room that like trading, try not to laugh, like trading CRISPR. And they've been doing it for a long time, almost obsessed with it. But here we are, and you are breaking out. And I will give it to them. They nailed it. You are breaking out here, and you are doing it on huge volume. And you got a large runway here, like real large runway here. And I'm not a huge fan of trading these names just because they're so interest rate sensitive right now. And we've just had nothing but, you know, lies, sugar-coated lies on what's going on with interest rates. But it's starting to shape up, and we are going to have to start looking at the XBI names. I think that a great scan that I could give you to run would be look at cash flow positive companies that are trading near or at book value right now. I think it's that time. We did that scan 2 years ago on this channel, and people did very, very well with it. That is it.